Hi friends, this is CA Kiran Kumar. In this video, let's discuss about part 3, that is tax invoice, credit note and debit notes under GST. As of now, we have discussed about part 1, that is registration under GST, and part 2 about returns under GST. Now we will discuss about part 3. So, whoever wants to download this ebook, go to the Telegram link, whatever I'm mentioning the same in the description. So you can go to the link and you can download the book, so that you can simultaneously refer this book. So let's go to the topic. So there is no specific format for the tax invoice, but certain fields have been prescribed as mandatory fields under tax invoice. So the tax invoice shall be issued by a registered person supplying taxable goods or taxable services or both. And what is the time limit for issuance of tax invoice? It is different for supply of goods and supply of services. So now let's see about in case of supply of goods. In case of movement of goods, involving movement of goods, then the registered person shall issue a tax invoice before or at the time of removal of goods. This is in case of movement of goods. When there is no involvement of movement of goods, then the registered taxpayer shall issue a tax invoice before or at the time of delivery or making available to the recipient. And in case of sale or return basis, when should we issue tax invoice? Before, we should know what is sale or return basis. Sale or return basis, sometimes called it as approval basis. Supplier will supply to the consignee or to the customer at free of cost, and the supplier will receive the money only the customer satisfied or the consignee sold the goods. In such cases, the tax invoice will be issued before or at the time of supply, or 6 months from the date of removal of goods, whichever is earlier. And time of supply is a separate chapter in this series. I will explain you in the next series, so please follow this series. And in case of sale or return basis, this is the time limit for issue of tax invoice. And in case of supply of services, the tax invoice shall be issued within 30 days from the date of supply. In case supply of services ceases before its completion, suppose the contract has undergone for 1 year, but within 6 months the supply of services ceases before its completion, then the tax invoice shall be issued at the time when the supply ceases to the extent of supply made. And in case of continuous supply of goods, before that we should know what is continuous supply of goods. The continuous supply of goods means which is provided or agreed to be provided continuously on a recurrent basis under a contract for which supplier invoices the recipient on a regular or periodical basis. So this is called continuous supply of goods, which will be provided by the supplier on a continuous or recurrent basis under a contract. Then it will be treated as continuous supply of goods. In such cases, the supplier will raise invoice where the successive statements of accounts or successive payments are involved. Then the invoice will be issued before or at the time of each statement received or each such payment is received. So in these cases, invoice will be issued at the time of such statement issued or each such payment is received. And let's see in case of continuous supply of service. In case of continuous supply of service, when should we raise a tax invoice? Continuous supply of service means it is like continuous supply of goods, but here the time limit is given, that is exceeding 3 months on a recurrent basis under a contract for a period exceeding 3 months with a periodic payment of obligation. If the service provider is providing continuously on recurrent basis, then it will be treated as continuous supply of service, and the payment obligation is mentioned. So when should we raise tax invoice? In case the due date of payment is ascertainable, the tax invoice shall be issued on or before the due date of payment if the due date of the payment is ascertainable. In case the due date of payment is not ascertainable from the contract, then the tax invoice shall be issued before or at the time when the supplier of service receives the payment. Actually, when he receives the payment, then only he will raise the tax invoice when the due date of the payment is not ascertainable. And when the payment is linked to the completion of event, then the tax invoice will be issued on or before the completion of the event. This is for the continuous supply of service. Let's see what are the important contents of tax invoice. As we have already discussed that there is no format prescribed under GST Act for a tax invoice, but the rules make mandatory for certain fields. These were the fields. Let's see one by one. Name, address and GST of the supplier if the recipient is registered, and the consecutive serial number not exceeding 16 characters. This is most important. GST portal won't accept the tax invoice number if exceeds 16 character digit. So be careful while you are mentioning the tax invoice number. And date of issue, and the recipient is unregistered. If the recipient is unregistered, then you have to mention name, address of the recipient and address of the deliverer. And HSN code is mandated, and description of the goods you have to mention, and the quantity, total value, taxable value of the supply of goods or service, and amount of tax and place of supply. This is also a separate chapter we will discuss later. And this is most important, whether the tax is payable under RCM when the service is transport services or any other advocate services or any other services which were mentioned in the RCM list, reverse charge list. Then in the tax invoice he has to mention that the tax is payable by the recipient likewise. So this is most important, you have to mention if you are providing RCM services. And signature and digital signature of the supplier is mandatory. And quick response code, this is applicable when e-invoicing is applicable. So I have already made a detailed video, practical video on how to generate e-invoice without any software. So I am mentioning the same on the description, please check. And number of HSN codes on the invoice, I have already told you that from 1st April 2021 HSN code on the invoice is mandatory. If up to 5 crores, minimum 4 digits is mandatory, and more than 5 crores, then minimum 6 digits are mandatory. And I have already made a detailed video on HSN codes, how to search for HSN codes and all. I am mentioning the same on the description, please check. And in case of export of service or goods, then you have to carry some other documents other than this invoice, that is supplement for export and supply to such unit and such developer for authorized operations, payment of integrated tax and without payment of IGST. So these you need to maintain while you are preparing the tax invoice. When you are providing export of services or goods, these are the additional documents you need to maintain. Anyway, export and imports are the separate chapter. I will detailedly mention in this series in the next chapter. So e-invoicing I am mentioning the same on the description as we discussed. From the 1st April 2021, e-invoicing mandatory for the taxpayers whose aggregate turnover in the previous year exceed 50 crores. So let's see the special cases we need to give tax invoice, and we'll say revised tax invoice. Revised tax invoice means you have already issued a tax invoice but you are revising the same tax invoice, in which case every registered person who has been granted registration with effect from the date earlier than the date of issuance of GST registration to him may issue a revised tax invoice within 1 month from the date of registration. Suppose from on 1st March 2021 you have no GST registration number. You have applied for 5th of March and you got the same on 8th March 2021. So there is 8 days gap from 1st March to 8th March to get the registration. So you have already given an invoice to some other persons on 1st March, but after your registration within 1 month from 8th March you can revise the tax invoice that you have already made to the recipient. So this is for revised tax invoice. And tax invoice not required in the following cases: if the value of goods or services are both less than 200 rupees, not required, and the recipient is unregistered, is also tax invoice is not required. And bill of supply is most important. The bill of supply will be issued by the registered person when he is supplying exempted goods or exempted services or both, and the registered person paying under composition levy. Under the composition levy, you must know that the tax need to be paid on the taxable value only. He couldn't able to take any input. So in such cases also bill of supply need to be issued. instead of tax invoice, because exempted goods or services there is no involvement of tax, so there is not required to issue tax invoice mandatorily. Bill of supply is sufficient. And invoice come bill of supply. The registered person is supplying taxable as well as exempted goods as services, then he can issue invoice come bill of supply when he is supplying to an unregistered person. This is most important. He can issue only invoice come bill of supply when he is supplying to an unregistered person only. And receipt voucher means when the service provider, the registered person, on the receipt of advance payment against to his service with respect to any supply of goods or services, he has to issue a receipt voucher against to that advance payment. So we have to say immediately refund voucher when he has issued a receipt voucher by saying that I have taken the advance payment, but subsequently he couldn't able to made any supply, or subsequently no supply is made or no tax invoice is issued in pursuance thereof, then he has to give the refund. Then he has to give a refund voucher against to such payment, because he didn't made any services against to that services on which he has taken the advances. So subsequently he has to issue a refund voucher. And at the time of receipt voucher you couldn't able to find the tax rate, then you have to take 18% by default. And the nature of supply you couldn't able to determine, then the same will be treated as interstate supply and IGST will be levied on the same. And delivery challan as per rule 55 specifies the cases where the time of removal of goods, this is only speaking about goods only, not regarding the services, goods may be removed on delivery challan. Invoice may be issued later after the delivery. The following cases were given for issuing delivery challan. Let's see one by one. Supply of liquid gas where the quantity at the time of removal, where quantity of the removal from the supply of the business is not known, then he has to issue delivery challan, and invoice may be issued after completion of the delivery. And the transportation of goods for a job work, then also he issue delivery challan. And job work is a separate chapter, I will discuss later in the separate series, so be follow for this series. And the transportation of goods for reasons other than by way of supply are the cases as may be notified by the GST Council or CBSE. So in these cases he has to issue delivery challan, and he may issue the invoice subsequently after the delivery. And in case of a delivery challan, he has to issue triplicate, he has to prepare a triplicate in case of supply of goods in the following manner. Number 1, original copy he should issue for the consignee, and the duplicate copy for the transporter, and the triplicate copy for the consignor. And we are going to the most important topics, that is credit note. Generally credit note will be issued by the taxpayer to reduce the tax liability. Suppose you have provided 100 rupees worth of service, but you have given tax invoice for the value of 120, and after you realize that you have issued the against highest amount and you have to reduce the amount, then you can give a credit note for the 20 rupees for the excess amount whatever you have given to reduce the amount. This is one of the scenario, and we will discuss more scenarios later. So credit note is a convenient and legal method by which the value of goods or services in the original tax invoice can be amended or revised, as we discussed in the example. The issuance of credit note easily allows the supplier to decrease, this is most important, to decrease the tax liability in his returns without requiring him to undertake the tedious process of refunds. So instead of going for the refunds, he can just issue a credit note to reduce the amount. He can adjust the amount with the next month liability. Now we can see the situations where we have to issue the credit note. The supplier has erroneously declared a value which is more than the actual value of the goods or services. So he has issued erroneously more than the actual rupees. In the example, he has issued for 120 instead of 100, then he will issue a credit note for 20 rupees to reduce the tax liability. And the supplier erroneously declared higher rate of tax. Suppose he has issued 28% instead of 18%. Then he has to issue a credit note for the difference of percentage to reduce the tax liability, and the quantity received by the recipient is less than what he has declared. Suppose the quantity ordered by the recipient is 100, but he has actually received 80 quantity only. That means the supplier has provided less number of quantity. Then the recipient will raise a debit note on the supplier, and the supplier against to that he will issue a credit note. Then he can reduce the tax liability and he can match with the 80 quantity, actual quantity. And the quantity of goods or services are both supplied is not to the satisfaction of the recipient. If the recipient is not satisfied with the goods, whatever the goods received or services received, then he can revert back to the supplier. He can return the same goods to the supplier. Then also the supplier has to issue credit note. So in this cases, credit note need to be issued by the supplier, and we will see for the debit note. So debit note is complete against to the credit note. So in case of credit note, we reduce the tax liability, but in case of debit note, we will increase the tax liability. We will issue the debit note to enhance the liability, to create an additional liability. Here you can see the issuance of debit note creates additional tax liability. And if suppose you have supplied 100 rupees of goods or services to your recipient, but you have given tax invoice only for the 80 rupees, then you have to raise the 20 rupees additional difference of amount to increase your tax liability, to create additional liability. For the 20 rupees you have to issue debit note on the recipient, and we will see the scenarios on which cases we can raise a debit note. Debit note will be issued in the following situations to regularize the type of transaction. The supplier erroneously declared a value less than the actual value. In this example, we have mentioned 80. He has already given actual quantity is 100. So to increase that liability, he has to issue debit note, and the supplier has erroneously declared a lower rate of tax. Instead of 18%, he has issued for 6%. Then he has to give additional liability by creating an invoice for the difference amount on the recipient. So he has to create the additional liability. So the quantity received by the recipient is more than what has been declared in the tax invoice. Suppose the recipient is ordered for 100 rupees, but he has received 120 quantity, then also the recipient, the supplier needs to issue a debit note. The quantity received by the recipient is more than what he has been declared in the tax invoice. So in these cases, debit note will be generally issued, and we have already discussed how to upload debit note or credit note on GST portal in the returns chapter. You can refer the same on the returns chapter part 2. So this is for the day. Thank you very much. For more interesting video, please subscribe and share this series to the needy people. I am doing this series for the needful people who can't bear for this type of content. So please share to the needful people so they can be benefited. So thank you very much. This is for the day.